All right, everyone. Thank you for stopping by. On this channel, I cover both crypto market news and also stock market news. Here's a few of the titles you might have missed. I do my best to cover a lot of them. So if this is your first time to the channel, go ahead and please subscribe if you don't mind and leave a comment, and then I'll get back to you in the comment section. I'll answer it if you have any questions about anything else. So let's get to the first story. As we can see here, the Ethereum market is below the $1 trillion mark. This is a few days after the Ethereum merge, and the whole crypto market has been going down. As you can see, the Bitcoin is below its psychological number of 20,000, and it's been going down. It's been steadily up and down a little bit, but currently, at the time of this recording, it is at 19,374 dollars. And Ethereum, I think a lot of people was hoping that it was going to go up after the merge, but unfortunately, that is not what happened. But according to this video here, it sits at $1,300.55. But at the same time, it's still early, and because of the merge, though, Ethereum has become more environmentally friendly. So therefore, we have to look forward in the future to see what's going on with Ethereum. So let's scroll down all the way to the XRP. XRP, though, has been going up in the last 24 hours. It's up 8%. In the last 7 days, it's up 5%. So this is honestly the only worthy crypto a worthy mention that's been going up, specifically because of the SEC that's going on, as you can see here. Let me bring that up. Where's that? So, and here it goes here. So the SEC, Ripple calls for immediate ruling and suit over whether XRP sales violated securities laws. So that could be the reason why XRP has been going up versus all the other coins. So as you can see here, like I said earlier, XRP Ripple is up 8% in the last 24 hours and 7 days. It's up at 5.6%. So as the SEC calls for this, it looks like because of it, it looks like the suit might end. So we're still waiting to see what's going on with that. So let's go to the next one and see. We're gonna be looking at Shiba Burn. Of course, you guys, Shiba is one of our favorite crypto coins because of what they're doing and because of what we hope they will be doing in the future. And of course, as you can see, the price now it has gone down along with a lot of the other cryptos. So let me look over here. A lot along with a lot of the other crypto, Shiba as well has been going down. And as you can see here, in the last 7 days, Shiba has gone down 14.7%, and in the last 24 hours, it's gone up to 2% as the time of this recording. So let's go to the burn to see what's going on with that. There hasn't been a lot of activity with the Shiba, but it looks like they're continuing with the burn, even though the stock, well, I'm sorry, the crypto coin has gone down. All right, so that's Shiba. So now let's go to, you probably have heard this one. So this is the FedEx CEO who is saying that he expects a worldwide recession. So let's see what, as he sit down with Kramer, let's see what he has to say about that. Um,
Talking about a reduction your next quarter in what I thought you were going to make versus what you're making. Well, it says to me, don't buy back. Well, don't buy back. Yeah, we are. We're reviewing all our cost actions right now. We're reducing our capex quite significantly this year, and we think it's allocation of capital. This is a good use of our capital. But 548 was the estimate. Yeah. For second. You're gonna come in at 275. Well, I mean that's got to be more than just Asia service. No, we're seeing that the volume decline in every segment around the world, and so it's just started our second quarter, The weekly numbers are not looking so good. So we just we just assume at this point that the economic conditions are not going to be good. But it basically allows us then to fully go into cost management mode and take those actions that we can then restructure FedEx in a different way.
Russia, we going into a worldwide recession?
Well, I'm not an economist, but
you know more than economists. Come on, they don't. They just push papers. You actually look at things.
Well, I think so.
You think we are going into a recession?
I think so, but again, these numbers don't portend very well.
U.S. in the last few weeks as bad as China in the last few weeks.
Yeah, the U.S. Consumer has definitely spending less, but the U.S. has been somewhat insulated because the U.S. dollar is is the currency of choice for the world, and there's some insulation there. But I do see the U.S. is slowing down too.
Don't miss a second of. So, as he said, the U.S. economy is slowing down. So, therefore, that's why he's part of it is why he's expecting a worldwide recession. So, let's go to the next news. This is, I don't know if you've seen this one. As at the time of this recording, the Beyond Meat CEO, Doug Ramsey, here's a picture of him right here. He basically, it looks like he took a bite out of somebody's nose. So unfortunately, at the Arkansas College game, so I'm not sure. I didn't watch the game, so I don't know what's going on with that. But I'm sure it didn't taste like Beyond Meat. That's human flesh there, uh, not the veggie meat that this guy serves. But at the same time, you just have to, they haven't. Made a statement yet once they reached out to them, but it's unfortunate that we really don't know what's happened, and allegedly that's what he did, and we don't know if it was an altercation, and we don't know exactly what's going on with that. But they did miss their earnings, so maybe he's probably just venting, or he's probably just taking some frustration out of someone, and I don't even know what team he was rooting for, if his team won or lost, but that's neither here or there. So we just have to wait on that to see what's going on. So if you guys can see that the interest rate for homes for mortgages has been going up and will continue to go up because the Fed keep raising the rates. So the more home builders lower prices as sentiment falls to ninth straight month. So basically, it's because less people are buying. So yes, they fall, but at the same time, it's higher costs for land, labor, and materials have made it hard for builders to lower prices. But they are now being forced to, and they're being forced to because of they don't have a lot of mortgage rates out there, and a lot of people aren't really buying the homes. So if you have a bunch of houses just sitting there, I mean, what are you going to do? You're just going to lose out money, and part of it is because of quote this recession we're going to um, that we're supposed to be facing in the next year, in the next coming 8 months to a year or whatnot, what all the people are saying. But however, you just have to be careful to a lot of people are hurting, right? So they will continue to be hurting, unfortunately. But at the same time, I don't see how we might be in a recession um, because a lot of people are working. So here's Mr. Wonderful, one of my favorite sharks here, and let's see what he has to say about that.
Too low. If I'm working hard, it makes me feel good that they're watching.
But KeyBank is out with a very positive note today, double upgrading its outlook on that space to overweight. Kevin O'Leary, is now the time to upgrade home builder stocks to overweight with a 20% upside? Really?
It's a counter call, and I like calls like this because it takes a lot of guts knowing the Fed is still against you in headwinds because mortgage rates are definitely going up. Just look at the 2-year, look at the 10-year. But bottom line is, in this country, we do not have enough housing. That's a problem. And so
as the mortgage rates go up, of course, expect less people to buy the homes, and that is why I believe builders will be forced to lower their prices in order to attract buyers. But let's listen to Kevin O'Leary. He's saying that people we never have enough houses, but if a mortgage costs less than the rent, then I'm assuming a lot less people will be willing to buy houses, especially if they're going to be bound by a 30-year mortgage or 15-year mortgage in order to pay it off. But home ownership is always a good thing, because you can't get kicked out.
Even if interest rates get mortgages up past 6%, there's still going to be demand for housing because historically that's not really been a very high rate over a 30-year period for mortgages. So end of story. It's gutsy, I got to admit. And there's one other thing to look at. If you look at Home Depot, which I consider such a great index for housing, and that's a stalwart that's been in indexes like the Alps OUSA forever. Mm-hmm. It's been beaten up, but it's got a 16% increase in dividends. It's got an ROA of over double digit, and it pays a really good div yield. It's in the same boat. If you're going to buy housing, you might as well put an allocation into Home Depot.
I mean, not really. If you might choose to fix up your house rather than buy a house if mortgage rates continue to go up, Kev.
I agree with him, because the truth is, I mean, it's always cheaper to make the repairs to the house than get a whole new mortgage that you'll be tied to for the next 15 or 30 years. So I agree with him on that, especially with the rates going up. Let's continue.
I mean, I can understand the Home Depot play, but it's not the same boat.
The sentiment against housing really goes to Depot. Depot's getting beaten up, and I think it's a fantastic company because it's got great metrics. We talked about the importance of dividend yields. We talked about that's a really good way to look at a company's ability to stay on course with their business model. Depot's management has been weathering the storm, and every time you get a downgrade on housing, the stock gets beaten up. And I agree with you. It really doesn't have a lot to do with new houses. But if you are going to make new houses more expensive, you're going to spend a lot more time fixing up housing. So I'd say if you're going to go and buy an index of home builders, add a little sauce, just a little sprinkle of Home Depot in there too. You're in the same sector.
Yeah. Well, Shannon, you own it, so I guess you agree with Kevin O'Leary. The question is, do you like it more than, as you would say, adjacent stocks like the builders?
Yeah, we definitely prefer housing adjacent stocks, Scott. I think in this a period for anchored to a very low mortgage rate for many buyers. New buyers are not seeing that inventory. One thing that could really change for home builders, though, and an area that we obviously haven't been in, but if you start to think about the rent increases that we're seeing as part of the CPI print, and buyers start to accept that mortgage rates aren't going to go back down under full.
I think the fact that rent is going up almost everywhere, that people are really in a crunch. They're being forced to either buy a home or pay a higher rent. And I think a lot of people, because of the rates going up, they're choosing to stay in their apartments longer.
At some point, you hit that inflection point where supply has picked up incrementally. We're seeing it already in terms of month of supply, and rents are increasing at a rate that start to push, potential buyers into that territory. So I think the housing market is not dead, but I do think there's going to be a delay in some of this demand, and I think this call on the home buyers is a little early.
What do you think?
Really? I want to get, I'm listening to this segment, and I'm thinking going second derivative on housing. By the way, the concern that I have would be credit availability more than anything else. Louisiana Pacific, that is a great second derivative trade off of this. It's a name that I've owned in the past. Trades it 3 times right now. Gives a dividend yield. Company is right near its June lows. I think that's the second derivative play if housing's going to recover.
The other
multiple trading at.
All right. Thank you guys for watching. Please go ahead. If this is your first time, go ahead and subscribe and leave a comment. In the comment section, I will go ahead and read it, and I will leave a comment as well. That is it for today. Look back tomorrow, or by the next day, I will post another video regarding stock and market